All right, yes, perfect. So first of all, what did we touch on in the previous video? We touched on candle signs, and mainly again that respect and disrespect. That is quite important to understand, because just purely based on that, in combination with that context, it makes it very clear on where the next candle potentially wants to trade towards. That comes in very handy, of course, because if we want to predict, anticipate where the next monthly candle wants to trade towards, then that is exactly how we can go about that. And that is very useful, of course. Now, the reason I mentioned that, the reason I mentioned the previous video is again because we're building the story. So we have basically gone over bias, narrative, boundary, quite in depth, I would argue. Again, we're not done just yet. We're going to go way deeper into that as well, how we can combine that with execution phases. But we need to understand now the next thing is, where is the target actually? Because what are we targeting? When do we actually stop looking for entries? That is very important because, of course, there's a reason why we use context. And the reason why we use context and what we went over is because in that area, so for example, the context here is that we can see we are moving lower from that premium array right there towards this swing low. That is our target. In that area from that premium array, in between that discount array, that is where your lower time frame order blocks will hold, your lower time frame order flow levels will hold, so your order flow lags, your fair value gaps will hold, etc. And outside of that context is where price action can get very messy. So we also mentioned that in the context video, we always need context. And that is going to be usual context or unusual context. But when is that context actually gone? Now, what do we actually do when the context is gone is the next video that we're going to go over. But right here, I want to go over the targets. So when do we stop looking at context? When is the context actually quote unquote gone right there? So in the previous video or the video before that, not too certain actually, but I mentioned that a context target or context high or context low is again the context target. The context target is either a swing low or swing high, depending on if we're bearish or bullish, or usually it's a previous X low, previous X high, again, depending on if we're bullish or bearish. So those are the usual targets right there. Now, I also mentioned that outside of the context, we can look to target something else. So we have usual context targets, unusual context targets, but also outside of context targets. So what does that mean? Well, first of all, when we have unusual context, again, this is the same example that we went over in the previous video. Again, I hope that clarifies it a little bit more, makes it easier to understand with the same example. That right here, at this moment in time, we had that sweep of that high, failing to create a new order flow lag higher, failing to create that fair value gap higher, indicating here that we are respecting that premium array. This caused us to create that unusual context. So on an unusual context basis, now the target would be just, again, the first discount array that we approach. Why is that again? We need to understand the basics there, that if we are bearish in our bias, so the bias is the first step of the foundational level. If we're bearish, we are targeting discount arrays. Ideally, the closest discount array. So the closest discount array, the first discount array that we encounter is the swing low right there. If we are bullish with our bias, so overall the fair value gaps are telling us that we want to go higher, so we are bullish in our bias, then we are targeting premium arrays. Ideally, again, the first premium array that we encounter. So in these first two candles right there, we were bullish overall. So the first target that we had was this swing high. Why is that? Because that right there was the first premium array that we are going to encounter on a monthly basis. So that is our first target right there. So once we respect that high right there, we have the unusual context right here. Then the target becomes the first discount array right there. So that is the first discount array. This creates again that context, where the context is now we are moving from this protected high towards this weak low right there, with the weak low being the target. So the weak low is the target right there. Also understanding right there that once that week low is taken, you do not want to actively look for any new trades anymore, because the context low, the target of the context, has been taken. So you want to take a step back. Now, what do you do after it? Again, that is where the next video comes in. Now, that is important, that is in an unusual context is your target. All right, but we also mentioned that if we want to capitalize on this ID right here, then waiting for the monthly is just very simply going to take too long. Why is that? Because we are not creating a fair value gap lower. We are not creating a premium array, a valid premium array, before we can actually dive into the monthly time frame right there to enter off the monthly time frame to target the monthly low. No. So we need something on the time frame below it to tell us, hey, can we capitalize on this ID through narrative? Because on the monthly, if we are going lower, where are we going lower from? Well, we don't really have a fair value gap just yet before we reach this target. So there's no clear boundary right there to enter off of to target that low before we actually reach the low. So right here, if we go into the weekly time frame, if it wants to, yes, perfect. So here we have the same monthly context, but at that moment in time, once we are respecting the high to the left right there, we can see that we are also creating a fair value gap lower on the weekly time frame right there. That is our new narrative at that moment in time, right? Because that is, if we are continuing lower, where are we likely continuing lower from? That narrative is the weekly value gap to continue lower from. That creates also the boundary. That is our context PD array. That is the boundary of the context, the third foundational level. So that also creates a target, because we need to understand that the context right there, every time I refer to a target, is the same target on the same time frame. That is the same with if we are respecting something. For example, here on the weekly, we can see that we are, well, we could be disrespecting this high because we are closing above it on a weekly. Then we need to understand that that high is a monthly PD array. So to add on to the candle signs a little bit more as well in the previous video, if we are respecting something, then we are respecting it on the same time frame that the PD array was created on. Yes, in that weekly fair value gap that we're seeing right there, we are not closing inside of it on a weekly basis, which is exactly what we want to see. Weekly PD array, weekly candle signs. But if we are, of course, if we are looking at the 1 hour time frame, we are going to close in that weekly fair value gap. Of course, but that is not relevant. That is where what we talked about, that displacement on the higher time frame in the form of that wick is going to be fair value gaps lower on the 1 hour time frame, for example, on the lower time frame. So that is the same premise with our context. Our boundary is on the weekly time frame, so our target is also on a weekly time frame. But what we saw, we also have a lower target right there, eventually, that we can reach for. But now it becomes very tricky, because when we come into this weekly fair value gap right there, in the form of that weekly premium array, we understand that the overall target that we had established was this monthly low right there. So can we take every 1 hour fair value gap lower right here to then continue lower to enter on, etc.? No. We always need to have new context, which also is established by having the target, because the target is understanding when the first context is gone. So at that moment in time, we have this target right there. That is our first target. Yes, this is the target of the unusual context, so on the time frame above it. But if we are entering on the 1 hour time frame, then once this low that is sitting right there is taken, we do not look for new entries until we have new context. And that context, again, how you can navigate that after the context is taken, what do you do, is what we're going to touch on in the next video. You just need to understand that right there, once that context is taken, you do not go into the 1 hour time frame to look for new entries again. No, you want to take a step back. So an entry should always be performed inside context. And the context here, the relevant context is again this area right there, from the premium array to the discount array. So once we reach that first context low right there, yes, the overall context is still right there, but we now want a new premium array, a new boundary to enter off of, a new boundary to look at the lower time frame to find our new entry pattern, which can then be found potentially on the daily, etc. Because we always need that new context constantly. So that is very important, that after that low is taken right there, we do not look at new entries, because that is the target. Once that target has been reached, we then look for new context overall. What does that look like? Again, next video is going to come in very handy with that as well. So that is your usual context target and your unusual context target. So it's important to understand that a usual context target and an unusual context target are usually not very far away. So they are part of your current order flow on what are we continuing lower off of, and the target is usually either the previous X low, previous X high, or to swing low, swing high. That's usually it. That is your context low, context high as a target right there. Now, there are, of course, also targets that are beyond our context highs and context lows. And that is the same thing that we are currently seeing. Because currently we can also see on a weekly time frame, we have this swing low right there. And we also have this swing low, which is, of course, we know that that's a monthly context low. But if we did not know that that's a monthly context low, and if that's not a monthly context low, then we can see on the weekly time frame, we now have 3 targets. 1, 2, 3. The last 2, so this one and that one right there, are not part of our weekly context. Meaning that after we take this low right here, we again don't want to look for entries. We need new context again. So these 2 targets that are further down the line right there, yes, they are targets. Completely fine. They are targets, but they are not your context target. Meaning that if we are in below this low at that moment in time, that is not where you're still following the 1 hour or the 15 minutes to look for your new entries. No, you first need new context. So you constantly need new context to navigate towards those lows. So what does that look like? Well, if we take these lows right here, then all you would be doing is, again, on the daily, on the 4 hour right there, you're looking at context to navigate towards those lows. So right here, we're coming off the weekly. On the weekly time frame, or the weekly fair value gap, the weekly was that low right there. That is the context low on the weekly. Then right now, you would, all right, let's see if the fair value gaps here are telling us new context to then target this low right there. But even with that, we need to understand that once we have this order flow lag right there, and let me use the replay tool to clear it up a little bit. Once we have this order flow lag right there, what can we continue lower from? Well, we have a very small fair value gap at the top with an order block right there. We can continue lower off of that. But we also need to recognize that at that moment in time, if this is our context again, the premium rate that we can continue lower from right there. And what is then the context? What is then the target again? The target on the 4 hour time frame is again this low right there. So after that low is taken, that is not where you want to again go into the 1 minute time frame, go into the 5 minute time frame to look for a new entry. No, because the context target has been taken. So you need always new context. Now, why do I emphasize on this so incredibly much? It's because we need to understand where to take trades. And if we understand context and the boundary and the target, so this is the boundary right here to go into the lower time frame, and this is the target. So after we reach this target, we are not in the lower time frame anymore right there. We need to understand where we want to enter, and we want to enter in between those levels, in between that premium array, in between that discount array right there in form of that target, because that is where your 5 minute even potentially your 1 minute order blocks will hold, your 1 minute fair value gaps will hold, your 5 minute fair value gaps will hold, if they are in context of those timeframes again. But it's important to understand that you know where you are going into the lower time frame from. So you know the exact spot where you are allowed to go into the lower time frame, because you can see here that we are in the lower time frame in very specific moments. It's not random, as in we are not in the lower time frame right here. At this moment in time, we are not in the lower time frame. Why not? Because simply there was no context right there for us to go into the lower time frame. And you can see, where does the messy price action happen? The messy price action happens where the consolidations happen, etc. happens when we don't have that context. And believe me, why I mention the higher time frame here, or the analyst phase, does the hard work. It's because if you understand the context, then you know where your lower time frame will hold. Lower time frame will always have fair value gaps, order blocks, potential entry patterns everywhere. But you need to understand from where to where. So what are the limits right there? What is the boundary and what is the limit to where you can take an entry? That is your boundary context and your target context. In between foundation level 3 and 4, that is where you look for the entry pattern on the lower time frame. Once the target has been reached, you do not look for your entry anymore, because that is where it now gets messy. So we need to understand, again, what we've been touching on this whole time is understanding where our entry pattern happens constantly, which means that overall, this weekly low that we are seeing right there, that target that we had, yes, that is our target. That does not mean that we can just go into the 5-minute time frame right there to keep on targeting that low. No, because here on the 4-hour, we trade 4-hour context right there to continue lower. So we can potentially go into the 5-minute right there. But once the context low has been reached for the 4-hour, we need, again, new context. So that new boundary to go into our entry pattern again. That is very, very important, because basically this area that we are seeing right here, from that context low to the weekly fair value gap, that is not where you're going into the 5-minute to look for your 5-minute order flow to look for entries on. That's not how you would approach that. That is where you take a step back to potentially go into the 1-hour to look for your new context lower again. That is very, very important to understand, because we can also see, look how messy this price action gets right here. Because we don't have context. Look how clean the price action was moving from that first premium rate on the 4-hour towards this low right there. That is because we have context. So here, you're going to get chopped up right here, lose all your profits, and that is because you're not trading in a context. You're not trading from a boundary to a clear target. So that is what we need to understand, that this weekly fair value gap again, the weekly low, the weekly swing low right here, and as well lower right there, they are targets. Yes, they can be a draw on liquidity. Yes, they can be used to help understand our bias and to help understand our narrative overall, because those are the direction, the overall target that we have on the longer term where we want to trade towards. They are not context targets. That is also why I mentioned that these discount arrays, they are targets, and we currently are going over targets. The boundary where you want to trade off of is always on the right side of your chart. It's always part of current order flow. These targets are never, it's a no-go. Never can be used as a boundary to look for a trade off of. Unless it's very specific conditions and we switch daily order flow bullish all of a sudden, etc. It's a different story. But those are not, the targets are not boundaries to go look at your 1-hour entry pattern, etc. No, that's not how it works. So if we take a look at another example, and afterwards we can see that we went over the story as well yesterday in the previous video, where we had the monthly fair value gap and we are not respecting it right there. So the next discount rate that we can reach for is, the premium rate is that high. So understanding the bias here is, again, all right, the bias is bullish, narrative, how can we deliver there? Currently, we do not have a monthly value gap or anything, so we can go into the time frame below that to look for our usual context, because this, again, is our unusual context. Unusual context target high is right there. Now that context or that target high is, again, not where we can now go into the 1 hour to look at every 1 hour order flow lag higher to hold right there. No, it's not how it works. So right there, we go into the weekly time frame first. Do we have anything on a weekly? Not really. Do we have anything on a daily? Yes, because we also talked about this right here, right? That daily fair value gap and this daily order block. Those two are, again, narrative boundaries, because if we are going higher, where are we going higher from? From those discount arrays that are sitting right there. Those boundaries have their own targets, where the first target is right there, that swing high. So after that swing high has been taken, that is, again, when you take a step back, need new context. Then we can see, again, what we went into a lot more detail is that we swept this previous day low in the previous video, and we now target this context high right there. So that small area is our context. And then afterwards, we need new context again. And this is the discount rate that we are likely continuing higher off of, that order block. All right, interesting. Then this right there is, again, the first premium rate that we encounter. So that's our target context again. So this area right here above that high is where we now need new context to potentially get involved again. So you're always trading small context towards the bigger target that is sitting right there. It's not just we have that target, so right now, all right, perfect, we can go into the 1 hour time frame and look for every long opportunity. No, to look for those 1 hour and 1 minute even long opportunities, you need to first have context towards that higher time frame drawn liquidity right there, towards this overall drawn liquidity. And that is the same with if you want to target beyond that. So after this high, the next discount array is this high right there. If you want to target that, you need context to guide you there. So that is very important, where we've just gone over usual context targets, unusual context targets, and outside of context targets. Now, again, this is something we'll go over way more in depth on as well. It's just very important to understand for you right now. And if you can understand this, then you have understood the video. So that is all I need you to understand right there, is that once we have a higher time frame target, etc., then we need to establish that this is not something we can just trade towards. As in, yes, it's a longer term target, longer term draw on liquidity. But we need to first have a boundary right there, a discount rate that we can push higher from, which leads to that context. That context has a target in itself. Once that context target has been taken, that usual context target has been taken right there, that is when we need to understand we don't want to get involved anymore, because the context is gone right there. The context is gone because we've both used up the boundary context and we have used up the target context. That is very important to understand. And if you understand that, again, then you fully understood it. So that is what you need to focus on right here. If you understand that, again, that is perfectly fine, because that allows us to move on to the next video, where what do we actually do once that context target is taken? Because we also understand that the monthly right there, if it wants to follow through, it's a lot of potential, right, to capitalize on the IDs if we have context. So after that first context is taken, we need to find new context to trade off of again, to then target that overall monthly high that is sitting right there. As long as we understand, we are always trading context, and the context is gone once the target has been taken. That is very, very important to understand again. All right, study this and then we're going to go into the next video where we will understand fully what we do after the context target has been taken. All right, perfect. Thank you.